Beside your three guitars that I can see from here, and I'm sure that you have a few others in storage. Which one
So,
is your favorite?
ironically, my favorite is not in the picture right now. I've got a couple Les Pauls that I've been playing with, but I'm kind of a Fender Telecaster bigot, and
Huh.
so that was the very first electric guitar that I bought only about 12 years ago. So I started a little later in life. Always wanted to be able to play, and just never took the time or made the effort. And at some point, I just decided I was going to bite the bullet and bought a nice Telecaster, and
Oh,
it's
nice.
actually I have a music room across from me, and have a few other guitars in there. But the one of the Les Pauls sitting behind me is one of my newer acquisitions. So I have a lot more guitars than I have talent to play them. So
It's a problem once you get into something and you start collecting and you just want the other sound and that can be a little bit better and this sits well. Les Paul, they are heavy and you have the neck and compared to the Fender Stratocaster, which I find them in between in terms of the size of uh, the width of the neck, let's call it.
yeah,
No, but I the best I have here is a ukulele that I acquired in one of my kind of vacations to Hawaii, and yeah, four strings is enough for me nowadays.
very nice.
But for you, that's not your only hobby. So we are recording this episode on July 16. Did you follow the football? Sorry, the soccer games yesterday over the weekend?
Very much. I watched as many of the Euro matches as I could. Certainly, all of the quarterfinals, semifinals, and the finals the other day. I was pulling for England, and unfortunately, they weren't to come through. They weren't able to get the last goal, and they lost it. I thought in heartbreaking fashion with such a late goal. But certainly, I thought Spain was the better team throughout the tournament. So, and then watching the Copa America as well, and disappointed in how the U.S. ended up. But I think long term it may work out because maybe we'll get a coach that'll bring us to greater heights in the next World Cup that we get to host. So, always trying to look at it as glass half full.
Yeah, I was cheering for England knowing that once they will reach the finals, and I'm very sorry for all my English friends. Um, yeah, as always, it's the English curse. They will somehow get to the finals, but then they will just kind of meltdown. But all the drama around the Copa America and Colombia, that was most definitely a drama. But let's talk about insurance. But
Yeah.
we, before we jump to that, Bruce, how about you'll tell the audience a little bit about yourself. How did you reach the world of insurance, and what do you do in data? Or I'll ask those questions about the data in 2 more minutes.
Yeah, I don't know how anybody ever gets in insurance. I don't think anybody chooses it. I think it somehow it chooses you. And I I was foolish enough to accept an invitation from the father of my next door neighbor, um, who worked for an insurance company. Was I was in college to do some
Hmm.
intern work for them when I was a computer science student at LSU, and did a couple of years there. When I got out of school, they offered me a job and ended up running their IT department at that mid-sized international insurance company after about 15 years there, and um, left there and spent 15 years at IBM as an associate partner in their insurance consulting business. For 12 of those years, I ran IBM's global insurance data and analytics practice, helped develop the IA and IIW products, and was involved in the donation of those products to Accord to help create the Accord standards. So I've been in the insurance data place a lot longer than I would like to admit. I wanted to create software kind of toward the end of my tenure at IBM. IBM was not interested in creating industry specific software. They really only wanted to focus on software at an enterprise level. And so took advantage of the opportunity to go to InsurTech, which was one of the three largest insurance software vendors on the P&C side, helped build the first vendor-driven software solution for data. At that point, Guidewire, Duck Creek, I don't believe any of those, I know none of those companies had data solutions at that point. And we were able to build something. We're very successful implementing it over the 6.5 years I was there. And then decided that I wanted to try and do it on my own. And Ajay Kelchkar, who's my business partner in crime, we've worked together for over 20 years now. We met, I was at IBM, he was at PwC. When IBM acquired PwC, we met and have been working together ever since. And he's a brilliant technologist and architect. And we complement each other's strengths and weaknesses very well. And so we've made a good pair. And so we decided to start Percipience and see if we could try and address what we found to be some gaps in insurance data capabilities that many folks in the market had. And we thought we had some ideas on how to address it. And we're trying to do the best we can at doing that.
Fantastic. Thank you. And I think this is called for the most basic question, which I think I'm going to title this episode Data, Data, and More Data. The biggest challenge that I keep hearing, and that's the secret sauce or the biggest challenge of understanding how insurance actually operates, is the data. So what is the data that we will keep hearing about? Which data? When do we use it? How do we use it? What type of data? What is the data enrichment that will be on top of it? What is the data?
I think, if you watch TV and you see the Salesforce commercials with Matthew McConaughey and he says, data is the new gold. Insurance companies are drowning in it for sure. And I think one of the biggest challenges, frankly, is separating what is useful and what is not, and focusing on how to derive value from what you use. It's so easy to get distracted by the volumes of data, the new data that's coming available. And unlike maybe in other aspects of our insurance life, I think those of us who have been in the insurance sector for some time wouldn't argue with the fact that insurance has never been known as the most technology forward industry on the face of the earth. This is an industry that knows how to measure risk. And I think they've applied technology very effectively, but not exactly innovatively historically. I think with a lot of the changes in data over the last 3, 5, 7 years, I think that's changing a little bit because data is really all that insurance companies have. It is their primary asset. It's not like we're manufacturing widgets that we can, get lower cost, per unit kind of opportunities or it's a highly regulated market, but it's a market of information, and it's a market of risk management, and it's a market of transaction management. And all of those things benefit from information and data that's available now in ways that simply wasn't possible even 10 years ago. And I think it's very hard for a lot of insurance companies to separate the practical driving of benefit to my business today from the, oh my God, this is expanding so quickly. If I don't start looking at what's coming down the pipe, I'm going to be left behind. And the reality is, I think you've got to do a little bit of both, right? If you're spending too much time just focusing on what problem you can solve today, you're not going to be able to keep up with some of the changes, and you could be left behind. On the other hand, if you're just focusing on what's coming up, it's changing so fast. If you're never driving value for your business today, you're missing too many opportunities. I think trying to identify that sweet spot in both sides is something that so many of our customers and insurance folks that I speak to at the conferences and stuff just really seem to struggle with.
Do you mind giving an example? You don't need to name names.
No, absolutely. So I know one company that we know very well um, decided to embark on a major transformation effort, and so they had several. They're a tier two company, so this is not a small firm. Um, they've been around for 80 plus years, and so they know what they're doing. They know their markets, and they've got systems in place that are very well schooled, well known, processes around them, and they realize that the market is changing so rapidly around them that they committed to becoming a data-driven business. That they realized that they, by focusing really on avoiding the wrong risks up front and managing their claims processes better on the back end, that in fairly insignificant ways, frankly, with fairly modest changes in their processes, could reap huge benefits for the company, because such a disproportionate amount of loss comes from such a small portion of the business that insurance companies write. And so managing that both upfront at the underwriting and risk assessment portion, as well as on the back end in claims processing, can have such a big benefit. They were unable to do that in any other way other than doubling down on their use of data and being more creative and expansive in the information they were looking at and how they evaluated its value internally. And so the company is literally turning its entire process around to focus on, instead of linearly looking at things, I think as many companies still do, where data is something that comes out in a report or a dashboard at the end of some process. They're very focused on getting that information fed into the front end, to the underwriters, to the actuaries in product development, to the claims managers, so that it's part of their operations, not part of management's assessment of their performance after the fact. And I think that's a big mind shift that I hear more and more aspirationally, but I don't frankly see as much practically, because it's a significant effort and a major commitment.
Yeah. And taking it back a little bit from a policyholder perspective. So when policyholder perspective, they apply for a policy. If it's the simplest one, some sort of a PLGL, car insurance, home insurance, very basic.
Yep.
They enter most of the information by themselves. What is the other data or data points that the insurance in the carrier adds to that? And then how does he use historical data to understand better that the risk, and as a result go through the underwriting process and actually offering a quote?
Well, I think that's a great question. I know from your background in some technologies that allow embedded insurance, context around insurance and applications and situations are very important to augmenting the understanding that an insurer can have in the risk that they're taking on. And I think with many states taking action to restrict the use of some data, credit scores, for example. We all know that has been traditionally something that many companies have used to kind of assess risk worthiness, for lack of a better term. and certainly some states have taken specific action. Companies have had to get much more creative. I think part of that, and one of the keys in looking at all these different sources is the credibility of the sources that they're looking at. Um, you know, certainly we know a lot of companies use things like social media information to see, you've got someone on a workers' comp claim, and there they are in a video doing a slam dunk jumping from the free throw line, when um, they're on a claim for a back injury, and so things like that have really helped in terms of claims, in terms of assessing risk, um, and looking at what activities people are involved in. There's so much information that's available publicly, but I think kind of fettering out what sources you can use credibly, fairly, and legally is becoming more challenging, I think, by the day.
Mm-hmm. Most definitely, the regulator has a very big say in, actually, the regulators have, especially the commissioner, they have the say about which data points can go into the model, and will that result with a fair and inclusive policy for the insurance company, so they can write their policy. At the end of the day, you don't want to have someone who is uninsured, so we can assess and provide some sort of support for the risk in the specific state, right?
Right.
So everyone needs to be potentially insured. However, the deductible is going to be very expensive. Also,
And only getting
the
more so
premium.
these days.
Oh,
Right.
especially here in LA, are you kidding? In Los Angeles and California, it's almost impossible to get home insurance and a couple of others, which in my opinion, that's the best time to go to a certain territory when no one else wants to be there, with many grains of salt and a lot of caveats about make sure
Sure.
that you do your homework before. So the reason I ask about the policyholder, kind of how they perceive the data, which they need to enter manually, or there is some sort of an automation. Then there
Right.
is a question of the intermediary, the broker, the agent, that sometimes they actually will do the taking of the data. And then the most important, and kind of getting to your specialty, how the insurance carrier, how the CIO or the chief data officer, how they look at the data and what they do about it, right? It's not because the policyholder has its own journey, the customer journey. But at the end of the day, that's only a query for something that is already ready in terms of underwriting and actuarial numbers and everything that is there.
Right.
How do you help them to take the right decisions to pull that data and get the results? Where do they do that? In-house? Do they outsource it?
Mm-hmm.
Yeah,
I think
please.
it's both. Yeah, I think it's both. So very few insurance companies, I think, have a big enough market segment where they can rely primarily on their own internal risks in assessing similar exposures. Certainly maybe a State Farm, or perhaps an Allstate, or AIG in certain lines. But even then, even these really large companies uh, only have so much internal data to go off of. So much of the profiling is beyond any internal data that they can possibly have. And again, going back to your point about the regulatory impact, the models that they have to create to assess this risk have to be phenomenally flexible to react to what are inevitable changes in what, both in terms of what data is available as well as what data is allowed and how. And so if you create a technical construct that doesn't provide and build in flexibility and the ability to evolve, not only the ability to evolve, but the ability to document and trace what you did when you did it, so that you can stand up to a regulator, so you can defend to a legal challenge, or your own internal, uh, you know, uh, folks who are looking at your practices. It's extremely important to think much more broadly, I think, now than we've ever had to before. Certainly I never, before we got into things like the machine learning models and more AI types of technologies, it never occurred to me to have documentation of the rules, externally available documentation about the rules that we went through to underwrite a specific policy. But now you've almost got to, right? No, I didn't discriminate against this risk because of any.
Wait. So you need to document the teaching algorithm, or
So I think you do. I think you do now,
no?
because
I can understand that you need to document the rules, right? Even if it's a simple flow chart, right? You have the different ifs, if this, then that, all these
yeah,
rules. But
yes.
do you need to document the, I don't know, fully guided or semi-guided machine learning, all the teaching mechanism?
So the way I look at it is I do believe that you need to document, and the way we talk about approaching it is by having specific test cases that are put through the algorithm to in some volume to evaluate that the results are not patterned in an inappropriate way. So, for example, that I'm not discriminating against race or any geographic location or things like that. And part of the challenges of many of these models, right? Exactly how all the decisions are being made and how it evolves are not all visible, right? I mean, and so if one of the examples that I've certainly often used is if you built a machine learning model, or and many people have, for hiring, right? If you're in technology or you're hiring for teaching a science or physics or something like that, and you give it the resumes of all of the existing employees, it's going to find overwhelmingly that there's a bias towards males in STEM science teaching, right? Well, then if you feed resumes to say, should I hire this person in? Well, if it's a female, they may be discriminated against because they aren't going to match that profile. So there are things that are characteristics of existing populations of data that are not legitimate discriminating factors that can be taken into account in a model. And you've got to be able to design tests to evaluate so that you can be sure from a compliance standpoint that you're operating ethically, legally, and morally appropriately.
Now, different topic. Earlier on, you mentioned Majesco, Duck Creek, Guidewire. What's the biggest challenge that the core systems or the core system providers, or actually their consumers, have when integrating with the different types of data that is needed?
Well, certainly, as you would expect, like all of these systems have proprietary data models and constructs. And the data models themselves are one challenge, but a data structure is eminently conquerable. What is certainly much more challenging is understanding the context within which the data exists within those structures. And so things as basic as how out of sequence transactions are processed, those are stored very differently, and the constructs of what is saved and what is not and what is available in data after the fact is very different across these systems. And so as companies, carriers, insurance organizations, even large MGAs and MGUs that we're working with, as they try and gather greater insights into their business by looking at their existing portfolio, learning what went well, what didn't, how can they use that to profile and improve upon both their product designs on the actuarial side, where we do tremendously sophisticated things with actuarial triangles, both on the premium and loss side, as well as on the underwriting side. As they assess that data, it can be very, very difficult to kind of get their hands around apples to apples comparisons in data that's come from different systems. More than 2/3, or the last study that I saw, I believe it was from Celent, said something like more than 2/3 of US P&C carriers have 3 or more different policy systems alone. And so very few insurance carriers are dealing with data from just a single application, but to get a full enterprise view and really assess the risk that they have, it's very challenging for them to do that. And so, unfortunately, most of the technologies right now still reverts to some level of automated assistance, but a lot of just integration work. Certainly, one of the things that we're working on and hope to have available actually in our next release in January is a much more automated AI-driven integration method to help reduce the amount of time, effort, and complexity that goes into integrating all the different systems. We have one customer right now that we're integrating 27 different core systems into our data platform, Data Magnifier, and all that's being done in a 10-month time frame in the first phase of the project before we can move on to the other systems that they have. And so this is obviously a very large company, but you don't get by those kind of integrations on 15 plus lines of business in a few weeks. It takes a little bit of time.
27 different policy management systems?
Not necessarily all policy systems. That includes underwriting, billing, claims, accounting and finance systems, some investment systems, 2 different investment systems. They've got program business that they're dealing with from multiple different MGAs, and the volumes there vary. So we're doing a number of different things, but they're very aggressive as a business, and they're addressing this with tremendous priority. And so we've got a fairly large team that's working to complete these integrations, and I'm thankful that we're only 2.5 months away from delivering the first phase. That's a 10-month total duration and going very well. And they're a great customer, and we're excited about how they're applying our product and the growth that they're expecting that will help them support.
So I just wonder about the decision making of the CIO or the VP of IP or whoever took the decision. You reach a point that you see a problem. Now, digital transformation, data efficiency, these all are not new, right? It's something that we've been talking about. Nowadays, it's more about what can we do with Gen AI, which is not just buzzwordy and cool and a chatbot, right? Something a little bit more mature than that. But going back to the basic, which is data. And as we said, data, if it's in tables, if it's written by hand or in a typewriter, it's been the core, but it's been the bread and butter, the core of the insurance industry since day almost zero. And I just wonder about how the CIO take that decision, and what's the difference between a first tier carrier, which here in the US will be more than $20 billion in gross written premium, or a regional, a fourth or a fifth tier carrier that has about, 100 million.
Yep.
And from there, we understand the size of their budgets and, of course, the number of systems that they need to deal with. So we still see this decision being taken into action. So what was the delay, and how they finally take a decision, and what type of decision?
that's such a great question. And one of the things that Ajay and I kind of started with as one of our main premises in starting Percipience and designing and developing our data magnifier product was really that there was a huge gap and a difference in the market in how different companies looked at these challenges that we didn't feel were being met very well by the existing software solutions that were out there. And that span of different needs for sizes is one of them. And what we find is that on the larger end, many of those companies got to be that size through what they believe was creating innovative, competitive advantages. And many of those companies want to create their own data solutions. They believe they can do the same thing. And some have done so very successfully. Frankly, most have not. Our best customers are folks who have failed 2 or 3 times because they appreciate how difficult it is. As a matter of fact, our first tier 1 customer had failed 3 times, and they were, tens and tens of millions of dollars into investments before we were given an opportunity to deliver, and we were able to get them into production in 9 months, and they built on the solution, and it's worked out very well for them. But on the larger side, they're looking as much as anything for assets that can help them build a unique solution that gives them a competitive advantage more quickly. On the lower side, they don't have the resources to do the complex integration, going even back to the question you asked before. It's not just about the data solution itself. You can have the most elegant data model and the most sophisticated analytics on the back end you want, but if you don't have the capability to get the data from your sources and from internal and external sources that you need to support that business into that solution, it isn't going to be driving very much value for your business. And so the smaller companies really don't have the IT investment and horsepower usually to develop their own software. And so they're looking more for a package capability that they have options with, where, if they can use it as pure software, integrate it to the packages they have and use it without having to do a tremendous amount of custom development work, then that's great. That's going to provide a lot of bang for the buck. Future proofing, some of them, especially when you get into the mid tiers, they start thinking, okay, I want software to get bang for the buck now, but long term, every insurance company is a little bit different. One of my favorite bosses of all time, Bob LaRue at InsurTech, formerly of InsurTech, once said, if you've met one insurance company, you've met one insurance company. Everybody's a little bit different.
That's smart.
And while 60, 70, 80% of the process and the constructs may be very similar, those different pieces on the back end that are unique are critically important and can be very different. And so what we've tried to do with our data product is build that core construct and build a client extension framework that kind of builds something that works both ways. It's software for what you can do now and delivers value immediately out of the box, but it has the extension capability that allows mid-size and larger customers to take it as an asset to extend into a competitive advantage that they can create uniquely, without having to necessarily go through the risk, the time, and the expense of hoping they can build it from scratch on their own. There's just no need for people to have to build data solutions completely from scratch anymore. I kind of look at it as very much kind of the way people looked at policy systems in the 80s, 90s, and early 2000s. You go back to the 80s, embarrassingly, when my career started, and there weren't that many viable policy administration packages. The technologies were very limited and stuff. And you still had a lot of companies in the US writing their own policy systems, right? With somewhat limited capabilities in many cases. But, by the time you got into the 90s and the 2000s, 95, 98% of the systems are purchased and licensed and not really built. Very few companies, I think, build policy or claim systems these days. we're at the early stages, I think, of data solutions on the early end of that curve. I think 10 years from now, I don't think very many companies are going to be building their data solutions from scratch. And so some of the things that we talk about with our clients as we're providing consulting support is you certainly want whatever data solution you're going to put in place now to last more than 10 or 15 years. 10 or 15 years from now, do you think that you're going to be dealing with vendor solutions or homegrown solutions? And if you believe that, you're going to be dealing more with vendor solutions in the future, are you better off going ahead and dealing with the best of your options now, helping invest and having those solutions grow so that you get the benefit of enhancements and expansion of those packages that are funded by the full portfolio of that vendor rather than just the dollars that you're willing to uniquely apply? Data is a lot more expensive to invest in than a policy or claim system. The technology around data capabilities, the sources of data have expand, every 6 months, much less. Most companies are still dealing with the same personal lines auto applications that they had 20 years ago.
So we are now in July, which means we passed, let's call it the spring and summer conference season that started in March and kind of ended in June. Next conference season will start September, October, and we're going to walk the halls mainly at InsurTech Connect in Vegas, so that will be mid-October. And like every time we're going to see rows of startups.
Absolutely.
And other vendor providers that will have a big plaque. It's like, we have unique data. We provide data solutions. Now, here in San Diego, we had the Hazard Hub, shout out to Bob, and a little bit northern to me in Santa Barbara, Carpi Data. Hazard Hub was acquired by Guidewire, if I'm not mistaken. And their value proposition was, here is an easy to digest API for unique data. We are going to provide you real-time data. I think it was for commercial insurance. Hazard Hub was more on the where you can have basic things, right? Fire hoses or all kinds of stuff like that can help you to better understand the data. And that's for the underwriting element. Now, when we are going to ITC, we're going to see all of these data providers.
Yep.
How do they integrate into all of these models, right? Because they are a data source. While mainly for a CIO, they are looking, how do I manage all the data that I have? Which from policies to claims to treasury to billing, all of these are things, and majority, right? The product itself is based on the historical risk data. How do they know how to work with the new vendors and the new, let's call it data enrichment that we see in real time that provide accurate risk? And then they need to think, what does it mean? And how can I work with the regulators to make sure that that product is valid?
I think that's such a great question. And
it's a complex one. There is no silver bullet.
No, there's not. And I think one of the challenges that I think a lot of insurers have, you go to places like ITC, as you mentioned, and you walk the floor and you almost need GPS to find your way out sometimes, right? So and as you said, you've got companies that are going to pop up and maybe they're there for a couple of years and then maybe not so much. And I think it's hard for folks to segment what the different types of data solutions are. There's such a big umbrella of data solutions. There are data providers. There are people who are providing services and data enrichment. There are people who are providing data platforms like we are at Percipience, where we're not trying to provide data to people. We're trying to provide a mechanism for people to assimilate and leverage value from all these data sources, because I don't think the the volumes, the expanse, the depth and breadth of data opportunities are going to slow down in
Oh no,
insurance.
no.
And
And we see
and
more
so
and more, and we see more and more, let's call it flavors of data, right? So I just gave the example of the data enrichment. Then now because of AI, you have that data synthesis. So you can train the different machine learnings. Then you have as a data platform, so to how to uh, assimilate it so you can work with it. Then you have the data analytics to get insights. Then you'll have this, and then you have that. And one of my favorite, it's structured and non-structured data and cleaning data. And so we can actually get it, so he can actually use it, so it will be uniform. Sorry, I interrupted you, please.
no, and still, and to your point, and still trace back to where it originally came from to make sure that we're using it properly and that we can understand the source. And that once we realize what benefit we can derive from it, how can we use it more efficiently? How can we transform it and leverage it into value and information for our business more quickly? It's a
Oh,
huge challenge. It's a huge challenge, and I think the a lot of it is process reengineering. I mentioned kind of a little
yep,
bit
yep.
earlier where I think still, regardless of the certainly much more expansive use, and I'd love to hear your opinion on this, the much more expansive use that insurers are making of data, I've seen to a lesser degree real process transformation to embed the use of that data in their daily processes. I still see it used much more on the back end as information and performance assessment of how we've done or what we're doing. I don't see it as much effectively used. Now, certainly a lot of carriers are, but I think more than not, I still think a lot of insurance organizations have not been as effective in transforming their processes to take advantage. And I think that's where much
Mm-hmm.
more of the opportunity lies, at least in my opinion. I do think that the one opportunity there, and you touched on it a little bit, I think, you know, historically, things have evolved so slowly in the world of insurance that making a big jump from a legacy system to a new system, when the changes and the additional functionality that was needed from where you are now to support the next business requirement, was so minuscule, right? It's a
Mm-hmm.
small incremental investment, and it makes it very hard to justify a significant investment to go to the next level of technology opportunity. I think the advances in the expansion of data opportunities now in insurance is changing that formula a little bit. I think a number of insurance organizations are a little bit slow to recognize that opportunity and to take advantage of it. And I'm hopeful that, for certainly those of us, I certainly have policies and go through the customer experience as well as trying to help carriers improve their customer experience and profitability and business efficiency. But I certainly hope that some of these things flow back in and companies are more willing to invest in the opportunities. They're not just competing now for customer experience with other insurance companies. They're competing with banks and every other business on the internet and available in the marketplace. And customers expect the customer experience to be seamless and much easier. And I know with one of your past opportunities and companies, you were focused on trying to help make that a little bit easier with some embedded insurance operations and opportunities. And
Mm-hmm.
that's certainly an opportunity that you recognized as well.
Of course, and I've been supporting always as an advisory board, and all kinds of investor in all kinds of different companies that are trying to make a marginal change, which has an economic value to it, right? So we are all trying to push this industry forward in one way or the other, because at the end of the day, I think that insurance, it's one of the more it's I'll call it the safety net of the economy. It's a stabilizing mechanism that we have to make sure that our economy runs smoothly. Having said that, We are way beyond the time that we set ourselves. And needless to say, there are many more questions beside the football helmets that you have behind you. Do you want to say something about them, or is that
Go Tigers.
go Tigers? Okay, that's good enough. So let me ask you the same question that I'm asking everyone. Well, we're kind of paraphrasing it. What would be a word of advice that you'll give the younger you, or when you entered the insurance industry?
God, what a great question. Um, you know, I think I wish that I had spent more time in the earlier part of my career really understanding a broader perspective and deeper into what drives business decisions and the business processes rather than always getting the view of IT support of those processes. Certainly, as I progressed in my career and in my consulting experience and stuff, I got a greater opportunity to kind of get into the business process and IT support of those. And I think if I had better understood some of those processes earlier in my career, I might have been able to um, collaborated much better with my business partners and the senior management of my companies to help introduce technology in more effective ways more quickly than I did. So many of us on the technology side um, are technologists first, and then applying that technology to a business person. I think there's so much more value looking at it the other way around. And I wish I had spent a little bit more of my learning on that side of the business.
Good point. Bruce, thank you very, very much for joining me today. It was a pleasure chatting with you. And I know we said 30 minutes, and here we are at the 55th minute. And most likely it will be less because I'm going to cut myself out as much as possible. So,
Oh,
thank
I wouldn't do that. Then there won't be any value left.
you. Fantastic. Bruce, hope to see you in Vegas, if not earlier, somewhere I have no idea where, in the East Coast, but yeah, we should. Sounds great. See you soon then. Cheers.